Here are 7 incredibly important money lessons that weren't taught to us in school. Number 1, money is tied to a value. There's this quote by Zig Ziglar that is, you can get everything in life that you want if you will just help enough other people get what they want. And by understanding this, it really changes your perspective on how to make money. We are taught in school and by society that making money is tied to employment. What job you have, the industry you're in, the job title you have. And I had this belief for so many years. Until very recently, I knew that there was a way to make money outside of the regular 9 to 5. And what I found very encouraging when I dug into this a bit deeper was that other people far younger than me, doing something that I wouldn't consider as a traditional job, seemed to be a lot more fulfilled and making a lot more money than me. And that's when I started to understand that making money or making a lot of money really doesn't have to be something that happens when you're in your late 40s, 50s, or even 60s. And you don't have to follow this linear path to get there. Instead, it's to do with how much value you can give. That's money's true essence. It's tied to the value you create, and the more people you reach and impact who find value in what you're doing, the greater your potential to earn. And if you look at the world's most successful people, entrepreneurs, designers, artists, they're solving problems or fulfilling needs on a huge scale. Don't think of money just as something that can only come to you through employment. If you find ways to provide real value to reach and impact more people, you'll find that money has a way of finding you in direct proportion to the value that you've contributed. Another thing we were never taught at school is to come up with our own point of view. Throughout our education, we're trained to do things a certain way. We're trained to follow instructions, to follow rules. We're taught how to think. And so even after coming out of school and into the adult world, we keep that mindset with us. Having your own point of view on finances is one of the rarest things out there. And because it's not taught at school, we tend to follow what other people are doing, assuming that they know better. So it makes us feel safe with the decisions that they're making for us. If everyone else is investing in something, then maybe we should too. If everyone else around us has an upgraded iPhone or a new watch, maybe we should buy that too. If everyone else seems to be working a 9 to 5, then maybe that's the best option to go down. I have my own point of view on these things. I haven't upgraded my Apple Watch since 2016 because it works perfectly fine, but I will happily spend on a cleaner to buy back some time, whereas other people might think that's a waste of money. The point is, it doesn't matter what other people think about your spending and investing. It's about understanding yourself and being confident with your own point of view, regardless of what everyone else seems to be doing or thinking. The third thing that was never taught in school is that budgeting is freedom. If you come across a business that didn't know how much money it was making, what money was coming in or out, you'd be wondering how much longer that business would survive for, let alone its potential for growth. This fundamental principle of tracking finances seems like a no-brainer in the business world. It's essential for growth, it's essential for planning, it's essential for stability. But when we shrink this concept down to fit into our personal lives, it suddenly becomes something we want to avoid because many of us see budgeting as a synonym for cutting back and living a life of deprivation rather than the opposite. What we want to see budgeting as is something that can help us strategically plan for financial growth and freedom. A budget is the thing that lets you say yes to more in life. Want to put down a deposit on a new home? Yes, you can afford to do that. Want to go on holiday? Yes, you can afford to do that. Your budget is the roadmap that shows you how to get to where you want responsibly and sustainably. By the way, if you like this video, you may also enjoy my free newsletter that comes out every single week. I share my lessons from the week, my favorite money tips or money stories, and I also throw in some of my favorite tools, podcasts, or books from the week. If you want to check it out, it's completely free and the link is in the description below. The next thing school never taught us is that we should spend on assets before liabilities. This concept is explained really well in the book Rich Dad, Poor Dad by Robert Kiyosaki, and it's the first time the penny really dropped for me. Kiyosaki describes an asset as something that makes you more money, while a liability is something that costs you money. For example, put simply, a rental property is an asset because it generates rental income for you, while a car is a liability because it requires ongoing maintenance and expenses and payments coming out of your pocket. The idea is to, at the initial stages of your wealth building journey, focus heavily on building assets and put the liabilities on hold. Investments include stocks, bonds, real estate. They're all examples of assets that can generate passive income. Once you've built up your assets, then you can focus on buying liabilities if you want to. But many people, A, don't know the difference between the two, and B, get this the other way around. So they end up, as soon as they make money, spending it straight away on buying liabilities like cars, expensive holidays, material possessions before they have built up their assets. As a result, they're working for money instead of having money work for them. So always buy assets before buying liabilities. The next thing school never taught us is that career is your number one money-making tool. So find what you love. About 90% of my friends are unfulfilled with their jobs, and this isn't uncommon. I've been there. I know what it's like to work at a job that doesn't seem to be bringing you anything but a paycheck, but there seems to be this new level of expectation that this is the norm. The expectation is that you're not meant to enjoy your job, and actually it's just there to make money so that you can use that money to enjoy things and enjoy life outside of work. We're taught that we need good grades to get a good job or have a good career, but we're not taught that your career is your number one wealth building tool. So you may as well take your time to find something that you truly enjoy and that you can stick out for decades to come. Most people hate their job, but they're paid well, or they love their job, but they find that it doesn't pay them well. If you can strike a balance between the two, even if it means taking a few extra years to explore new things or taking a step sideways instead of forwards, you'll still end up in a really good place, one that most people will never reach. The sixth thing we aren't taught at school is how to save money on taxes. Income tax stands as the UK government's primary revenue source. According to data from the last tax year, the UK government collected 250 billion from income tax alone, and then a further 87 billion from corporation tax. Although we know we have to pay tax, we're definitely not taught how to optimize our income in a way that saves money on taxes. Different income streams are taxed differently. Employment income is taxed the heaviest. So this is the money that comes through a 9-to-5 job, working for a salary or working for a paycheck. The tax bracket, at least in the UK, can go up to 45%. And that doesn't even take into account the six-figure curse, where the effective tax rate you're paying with money that you earn between £100,000 salary and £120,000 is 60%. Business income is taxed lower than employment income. Not only are corporation rates typically lower, but you also get to deduct your expenses before you pay tax, reducing your tax bill even further. And then investment income is usually the most favorable from a tax perspective. Contributing to a workplace pension gives you tax deductions. Earning from stocks or bonds, in some cases, you aren't required to pay any tax at all. You're not going to see these favorable tax rules with employment income. Even a basic understanding of this at school would be helpful, or even before entering the adult world, but it's never something that's going to be taught because it goes against the entire system. If you do want to learn more and take this into your own hands, I have a video right here on my channel, which is about how to save money on taxes in more detail. The seventh thing school didn't teach us is why investing is important. If you invest $1,000 in an investment which returns 10%, you have the choice to take out the 10% you make every year or to keep it in. If you choose to take out and spend that interest every year while keeping your initial $1,000 in, you'll have an extra $100 every year. In that case, at the end of 30 years, you'd have $4,000 in total. $1,000 that you'd already put in initially, and then an extra $3,000 from the 10% interest you withdrew every year, which is the $100 a year times 30. In the second case, at the end of 30 years, you'll have over $17,449, which is over 4 times what you have in the first case. That's because you're not only earning interest on your original $1,000, you're also earning it on the interest you make on that $1,000 every single year as well. When it comes to compound interest, the number one thing that is working in your favor is how much time you have. So the earlier you start, the longer you have for compound interest to work in your favor. Those are 7 essential money lessons that school didn't teach us but should have. I'd love to hear from you. Let me know in the comments which one of these most resonated with you and one thing you're going to do for yourself after watching this video. Thank you for watching.